What is happening to Monkey's savings? Monkey works hard. Monkey saves bananas. Monkey puts bananas in Monkey Bank. Monkey feels responsible. Monkey feels safe. Monkey is losing money. Slowly, quietly, every single day, without anyone telling Monkey, without anyone asking permission. Monkey's savings are shrinking in real terms while the number stays exactly the same. This is one of the most important things Monkey will ever understand about money. And almost nobody explains it properly. What is inflation? 10 years ago, one banana cost 1 leaf. Today, one banana costs 2 leaves. Monkey still has 100 leaves in savings. Monkey can now only buy 50 bananas instead of 100. Number in Monkey's account did not change. Purchasing power cut in half. This is inflation. The slow invisible tax on every monkey who keeps leaves sitting still. Prices rise. Savings stay same. Monkey gets poorer without spending a single leaf. Why does inflation happen? Too many leaves chasing too few bananas. When Monkey government prints more leaves without producing more bananas, each leaf becomes worth slightly less. When banana farmers produce less bananas, same amount of leaves chases fewer bananas. Price goes up. When shipping bananas costs more, that cost gets passed to Monkey at the store. When Monkey borrows cheap money and spends it all at once, demand spikes. Prices follow. Inflation has many causes. One result: everything costs more. Leaves worth less. The Monkey Bank interest rate problem. Monkey puts 1,000 leaves in savings account. Monkey Bank gives Monkey 1% interest per year. After 1 year, Monkey has 1,010 leaves. Monkey feels good. Meanwhile, inflation running at 4% per year. Banana prices up 4%. Monkey's 1,010 leaves now buys less than original 1,000 leaves bought last year. Monkey made 10 leaves. Monkey lost 40 leaves of purchasing power. Net result: Monkey is 30 leaves poorer in real terms. Monkey Bank did not warn Monkey about this. Monkey Bank never does. Real interest rate. There is a simple calculation Monkey should always know. Real interest rate equals nominal interest rate minus inflation rate. Monkey Bank gives 1%. Inflation is 4%. Real interest rate is negative 3%. Monkey is losing 3% of purchasing power every year by keeping leaves in standard savings account. This is not unusual. This happens regularly. In many monkey countries, the real interest rate has been negative for years. Entire generations of saving monkeys quietly losing value without understanding why. What does this look like over time? Monkey saves 10,000 leaves. Leaves them in savings account, earning 1% per year. Inflation averages 3% per year. After 10 years, Monkey still sees roughly 11,046 leaves in account. Monkey thinks savings grew. But those 11,046 leaves now buy what 8,200 leaves bought 10 years ago. Monkey lost nearly 20% of real purchasing power. While thinking they were being responsible, while doing everything right, the number went up. The value went down. Why do governments allow this? Inflation is not entirely accidental. Moderate inflation is considered healthy by most monkey economists. It encourages spending. Monkey who knows leaves will be worth less next year spends now. Economy moves. Businesses grow. Jobs created. Moderate inflation also slowly reduces the real value of government debt. Monkey government borrows 1 trillion leaves today. Inflation means those leaves are worth less when government has to pay back. Government benefits. Saving Monkey pays the invisible cost. The banana price illusion. Monkey gets a raise. 5% more leaves per year. Monkey feels richer. Inflation is 6%. Monkey is actually poorer than before the raise. This is called the money illusion. Monkey sees bigger number and assumes better situation. Does not account for what that number actually buys. Wages chase inflation. Usually slightly behind. Monkey runs to stand still. Some months Monkey runs and still falls back. What can Monkey do? Keeping all savings in standard savings account is not a neutral decision. It is a decision to slowly lose value. Monkey has options. High-yield savings accounts offer better interest rates, sometimes close to or above inflation. Not all monkey banks offer these. Monkey should look. Index funds historically average 7 to 10% return per year over long periods. Above inflation. Significantly above. Real estate has historically kept pace with or beaten inflation over long term. Commodities like gold traditionally hold value during high inflation periods. Treasury inflation-protected securities, TIPS, are government bonds specifically designed to keep pace with inflation. Each option has different risk level, different time commitment, different complexity, but all of them beat leaving leaves sitting in standard savings account losing value silently every single day. What Monkey should remember: doing nothing is a financial decision. Leaving savings untouched feels safe, feels responsible, is actually a slow guaranteed loss in most economic environments. Monkey does not need to take huge risks. Monkey does not need to become an expert overnight. Monkey needs to understand one thing clearly. Inflation exists. It is continuous. It does not stop because Monkey is not paying attention. The leaves are shrinking. Quietly. Every day. The only question is whether Monkey is doing something about it. Please subscribe.